Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far. Today we're going to be diving into our daily cryptocurrency market update, and we've got some really interesting things to share with you within this video. We're going to be not only tackling the realms of the cryptocurrency market, but we're going to be looking at the kind of external world around us. As we know, we are very tethered and affected by it. Right now, we've got a lot of uncertainty throughout markets at large. And this, of course, is weighing heavily on a rather risky speculative cryptocurrency space. So we're going to talk about it all within this video. We're going to be going over a number of interesting articles, such as the fact that Warren Buffett invested $1 billion in a Bitcoin-friendly neobank, dumps Visa and MasterCard stock. So what we're yet to see, one reason I'm so bullish on crypto is we're yet to see it really take hold. We're yet to see those banking services offer cryptocurrency services, as we're already starting to see those cryptocurrency services offer banking services. And one reason that they're going to do this, the banks, is because it's where the customers are going. They're watching their sort of spread, if you will, and seeing that a lot of money is actually flowing to these cryptocurrency services, and they're going to want a piece of that action, just like Buffett, who is typically not a Bitcoin fan. I don't know if it's him or Charlie Munger that said Bitcoin was rat poison squared or something. Don't happen to agree with that. But from their kind of old school value investing, you know, you can maybe see why they've got that view. But then again, Buffett still uses a flip phone, so maybe not the kind of guy you want to ask about technology, but certainly a very, very well-established investor. And you can see he's moving towards direct or indirect exposure to crypto. So we're going to get into that all. We're going to be looking at a number of things, like the fact that we have the UK inflationary stats, which only came in at 0.1% higher than the previous one. Not such a big jump like we saw in the US. The European Central Bank members say its bond buying could end in the third quarter. So Europe's central bank is going to continue to stimulate in the form of bond buybacks into this year. So they're not going to follow a Fed potential March interest rate hike, which is when I'm certainly expecting the Fed to up interest rates. I think they're going to do it by, or the Fed fund rate, I think they're going to do it by 0.25%, 25 bips. I don't think they're going to do a half percentage move. I just think they're going to ease this. They're going to be very easing into this to try and cool off inflation. Some interesting things took place yesterday. We had the US product price index, which is the cost of product pricing, in opposition with the US customer price index, which is what we monitor, you know, what people buy. And you can see that this has a sign of topping out. So there's a suggestion that inflation may be following this. You do have a number of other things taking place right now. We know that we have the Russia-Ukraine crisis. Crisis, is that even the right thing to call it? Tensions, if you will. Now, yesterday, we had an article saying that Russia had reduced the amount of troops that they had along the Ukrainian border. Today, we have an article from, or quoted from NATO, saying Russia is increasing troop numbers at the Ukrainian border, calls for talks. I don't know what to believe anymore. I'm going to largely, I think the mainstream media have really proven that they cannot be trusted throughout all this. They say one thing one day and another the next. This, to me, is starting to look like a little bit of FUD. Not that I don't think the situation is a real one, but I think that there are two parties that have vested interests in manipulating the truth in accordance with this. So who really knows what to believe? I think that this isn't going to result in such a catastrophic event that the mainstream media are portraying it as. And I think it's going to get worked out, and I think it's going to sort of quieten things down after. And it could be just a huge attention shift from what's currently taking place in the likes of the US, the UK, which is really, I mean, I'm from the UK, I still live in the UK, fortunately or unfortunately. And we're seeing a lower sort of financial lower side of society really, really suffer with inflation, because prices are going up through the roof and their wages just simply haven't. And inflation is a tax on everybody, and it certainly affects the lower part more than the upper part of society. And we're starting to see this. And the UK, they are going to up interest rates, the Bank of England. But when we look at, the reason I'm bringing up the UK, the European Central Bank, is simply because, you know, it's not just the US that affect markets. It's largely the US, given the fact that they have the dollar as the world reserve currency. But there's a story being painted among your sort of different nations. And trying to keep up with it all is quite taxing. That's why we really focus on the US as the kind of guiding light, if you will. But there's lots going on all over the place. So European Central Bank are essentially saying they're not going to do anything until the third quarter in terms of ending stimulus towards the sort of bond market. They may be in a slightly worse position than the US, and that's why they're going to have to do it in a slower manner. So we're still in this huge headwind. We've got things like NATO. We've got over here, the Moderna CEO says it's reasonable to think that the something may be in its final stages. So this could see a kind of boom of sectors opening up again, hopefully. Too early to tell. We will see. You've also got a number of people like Goldman Sachs and Credit Suisse saying that it's time to buy Chinese stocks. So there's a real, markets are in kind of they don't know whether they're coming or going right now. And our space, of course, is affected by that. One thing I think we need for crypto is a direction. This is showing indecision, and people aren't liking this because we're kind of one side of it, we're the next side of it. One thing we have done is broke above this 42 level range and actually held above it, which is certainly a step in the right direction. We need to go on to make higher highs and higher lows and really establish a trend. But I think once that trend is established, I think your confidence then ensues. And once we start putting in higher highs and higher lows on a macro level, still technically doing it today, we're off to the races here, guys. And I think that is cryptocurrency has a very bullish outlook, or I certainly have a very bullish outlook on crypto, given just how small of an industry it is and how much growth there is for it to obtain through its kind of life cycle of adoption and so on and so forth. So I'm not worried. I'm a happy hodler throughout this. I'm a happy accumulator throughout this. Even knowing that volatility is likely to come off the back end of everything that's taking place. Number of interesting things. We're looking at things from all angles here. The money supply, which is M2. They took M1 off, which I found rather interesting and rather telling. And you can see the money supply is directly correlated with inflation. So when they're telling you, it's supply chains, it's this, it's that. Yes, potentially there are a factor of that or an element of that involved here. But really, it's what the US have done in terms of inflating their monetary systems in wake of March 2020 and how they had to kind of prop everything up. This is still extremely significant, massively inflationary event. Inflation, cool off before we get that continuation. It's why we compared where Bitcoin currently is today with Amazon in 2010, because you had a similar sort of scenario take place, and Amazon ultimately went on to make higher ground and continue in its upward direction, which was really attributed to it becoming adopted. So the dollar's seeing a little bit of weakness today. Your S&P saw an uptick yesterday. Will it come down a little bit today? Too early to tell. FTSE certainly came off today. But all these markets are really showing quite a bit of indecision. We're not really seeing any sort of a clear direction. It's to do with everything that's taking place on a geopolitical and a macroeconomic scale. We've got Warren Buffett invests $1 billion in Bitcoin-friendly neobank, dumps Visa and MasterCard. The Oracle of Omaha now has more companies in his portfolio that have direct, indirect exposure to Bitcoin and similar cryptocurrencies. Warren Buffett is not opposed to making money. Yes, if he sees value in something, and there is clear value in offering Bitcoin and cryptocurrency services, that's why we're seeing the likes of PayPal, the likes of MasterCard and Visa, all these big companies get on board and get involved with crypto because there's a lot of value there. Warren Buffett won't miss that trend, even though he doesn't like the underlying asset that the services are made up of. Crypto investors hedging out a risk ahead of March rate hikes. Huge argument here to suggest that potentially rate hikes are already propped into markets. Now, I'm not sure is the truth. Could this have been people adjusting for rate hikes? Potentially. That was a significant drop. The worst drop the S&P saw really since March 2020. And a number of other assets did the same thing. Yeah. And that was really off the kind of back end of a threatening rate hike, which actually hasn't even happened yet. I think March could go two ways. I'm really looking forward to March because I'd like to see the Fed actually take a direction and an established one. I think right now they're very divided, and you can see this within markets. But I think that, let's say they come out and they do the 0.25, 25 bips that I think they're going to do in terms of the Fed fund rate. that doesn't really stop inflation. Inflation is still going to be a thing. For them to tackle inflation properly, they'd have to do an interest rate hike that I just don't think the economy could handle. Inflation doesn't go away. Bitcoin's never been more relevant, and neither has the cryptocurrency space. And that's something you've got to remember throughout these turbulent time periods. The media is just all over the place in regards to this Russia-Ukraine situation. So much so that we're probably not going to mention it again until something significant happens or doesn't happen. But yesterday they were literally coming out and saying that Russia had backed off, and now they're saying that they've actually increased the amount of troops that they have on the border. Doesn't make a huge deal of sense. We'll see. Lots taking place. I feel ultimately very sorry for the people that have been. I was listening to. So the US, even though they're going to stop bond buybacks and so on and so forth, they're still stimulating the economy in other ways. And I was listening to a really good podcast this morning when I was on a run, and it was talking about child credits. Now, I think absolutely we should be supporting the children of the nations in any which way, shape or form. But they were saying child credits and that kind of stimulus causes inflation. So yes, certain children get the benefit, but at the cost of an inflationary effect that potentially damages the many. And that's, there's the point that I'm trying to get at here. And that was I'm not calling for child credits to stop at all. I think, it's great that we support families that maybe struggle on that side of things. But the system works on inflation is what I'm trying to say here. And it doesn't go anywhere regardless of them stopping bond buybacks, which is really only the US that's going to do that potentially or hopefully by the end of March or end of this month. But you've still got the likes of Europe that will continue to stimulate, the likes of China that have already turned that stimulate tap on again, which is potentially why you might be seeing the likes of Goldman Sachs and Credit Suisse say that they want or are looking to invest over there. So there's so much going on, guys. Often very easy to get lost in it all. But that's why it's so important to really ground yourselves with the fundamental reasons for why you're in crypto. Yesterday, we saw Justin Trudeau and his government announce very draconian measures that really highlighted just the need for a monetary system that isn't that is outside the control of governments, because what they're doing there is they're playing God almost with turning off people's incomes and finance, which nowadays isn't something you can do. You try and live without any money in 2022 in the Western world. Good luck. Your standard of living isn't going to be great. I can tell you that now. And you're going to find it hard to feed yourself, so on and so forth. So it's, Bitcoin's never been so relevant, neither has crypto. Satoshi's vision was a real one. We also see over in Austria, they're doing a similar thing where they're saying if you don't comply, essentially we'll fine you, we'll take money from your bank account, which it just doesn't seem right to me. But I'm going to say political on the subject, like I've said I was going to, and let you guys make your own decisions. So that's all I have for you in this video, ladies and gentlemen. We'll see what this week brings. It's going to be an exciting week regardless. It's already been an exciting week for me in terms of the financial sectors. And yeah, I'll catch you all in the next YouTube video. Thank you very much for watching, guys, and I'll see you in the next one. Have a fantastic Wednesday, ladies and gents.